Tokenization is restructuring the global economy, and XRP is being positioned at the center of that liquidity and settlement layer. Not in theory, in live, documented, on-chain reality that you can watch happening in real time right now. Have you ever seen what transactions look like going across the last 100,000 blocks on the XRP Ledger's decentralized exchange? Because someone just visualized it, and what it shows is stunning. The Brazilian real flowing into RLUSD in massive volume, Ethereum, USDC, the Euro, Bitcoin, all being natively exchanged and routed globally, 24/7, with instant settlement. The bigger the transaction, the bigger the node on the visualization, and the flows between RLUSD and the Brazilian real are enormous. That is not a test network. That is not a demo. That is the XRP Ledger's DEX operating in production right now. Order book and automated market maker liquidity pools combined. Assets natively exchanged across currencies and tokens without a central intermediary. And when Ripple doubled down on Brazil over the last few weeks, sharing everything they're building there, the on-chain data was already showing you why. This is not financial advice. I am sharing publicly available information for educational purposes. Always do your own research. Before we get into it, drop DEX if you've seen the 100,000 block visualization and it changed how you think about the XRP ledger. Drop show me if you haven't seen it yet and want to understand what's actually flowing through the network right now. Because the on-chain data tells a story that the price chart refuses to show you. Welcome back. I am the calm analyst. Around here, we follow the on-chain data, not the headlines. Today, we're breaking down the live transaction flows on the XRP Ledger, the precise mechanics of the Ripple Treasury Swift connection, including what it actually means versus what people are claiming, the Noom partnership that's scaling real-time corridors, and the price projections for late 2026 based on the Bitcoin cycle model. Let's get into it. Let me start with what's actually happening on the XRP Ledger right now, because the visualization of the last 100,000 blocks on the decentralized exchange tells a story that most people in this market have never seen. The XRP Ledger has a native decentralized exchange built directly into the protocol, not a smart contract layered on top, not a third-party application, a native DEX that combines order book trading with automated market maker liquidity pools. Assets are natively exchanged and routed globally, 24/7, instant settlement. And when you visualize the actual transaction flows, what you see is massive volume moving between RLUSD and the Brazilian real. Significant flows in Ethereum, USDC, the Euro, and Bitcoin, all being routed through the XRP Ledger's native exchange infrastructure. The Brazilian real flows are particularly striking, and they explain why Ripple has been so aggressive about its Brazil expansion. The on-chain data shows that the corridor is already active. Real money is already moving. And as Ripple builds out its regulatory and banking infrastructure in Brazil, that volume has a clear pathway to scale dramatically. Now imagine where this goes when you add the yen, the yuan, the rupee, the peso, the dirham, every fiat currency, every tokenized asset, every stablecoin, all flowing through a native DEX on a ledger that settles in 4 seconds at fractions of a cent. The visualization of 100,000 blocks today is a preview of what a fully activated global liquidity layer looks like. If that visualization changed how you think about the XRP Ledger, if you went from seeing it as a payment rail to understanding it as a global liquidity routing engine, smash that like button. Because that distinction is the difference between understanding XRP as a $1.30 asset and understanding what it becomes at scale. Now let me be precise about the Ripple Treasury and Swift connection, because there has been a lot of misinformation and I want to give you exactly what's happening. No more, no less. Being a Swift certified partner means that Ripple Treasury is recognized by Swift as a software provider that can connect corporates and banks to Swift's messaging network and tools. It does not mean that XRP itself runs over Swift. Swift has not come out publicly and said they are using XRP. That needs to be clear. G-Treasury has been in the Swift certified program since 2014. The certification is about Treasury software meeting Swift's technical and security standards so customers can send, receive, and process Swift messages and use Swift reference data from inside the software. After Ripple bought G-Treasury for approximately $1 billion and rebranded it to Ripple Treasury, that same certified connectivity is now part of Ripple's corporate treasury suite. Ripple Treasury lets corporates manage fiat accounts, Swift connections, and digital asset accounts like XRP and RLUSD in one unified dashboard. The The SWIFT piece is a messaging and bank connectivity layer. XRP still runs on the XRP Ledger, which is a separate settlement network with its own rails and consensus. There is no protocol-level bridge where SWIFT messages automatically become XRP transactions. The more precise language is this: the Treasury platform that can hold and use XRP is connected to SWIFT. The corporate using Ripple Treasury can send payment instructions through SWIFT channels and separately manage XRP and RLUSD positions within the same interface. When Ripple's system determines that XRP provides the optimal settlement path, it can route the settlement through the XRP Ledger. But the SWIFT messaging and the XRP settlement are parallel systems operating within the same platform, not a direct pipe from one to the other. I want to be honest about this because understanding exactly where we are matters more than overselling where we might be. We are obviously wanting to move to a place where XRP transactions are moving seamlessly alongside the SWIFT system. I don't think we're quite there yet in terms of SWIFT announcing something like that, but the architecture that makes it possible now exists for the first time, and that's the critical development. Comment below. Does the precise explanation of the SWIFT connection change your view? Type "still bullish" if you understand the distinction and remain confident in the trajectory. Type "concerned" if the nuance changes your outlook. I want honest responses because the community deserves accuracy over hype. Now there's an additional layer to the SWIFT connection that deserves attention: the Thunes pathway. Ripple's partnership with Thunes has led to Thunes pay-to-bank service being part of SWIFT's network. This creates a routing path where XRP can be linked to banks through the Thunes connection within SWIFT's infrastructure. It's not the same as SWIFT directly adopting XRP, but it creates an indirect pathway where payment flows can route through Ripple's infrastructure and settle using XRP when it provides the optimal outcome. And there's another development. Monerex, built on the XRP Ledger, launched the Delta wallet featuring direct SWIFT integration, institutional-grade XRP, and DeFi for liquidity and yield generation, and self-custody storage for RLUSD, XRP, and MXI. This builds directly on Ripple's existing Treasury and SWIFT infrastructure connections, showing that the ecosystem around the SWIFT integration is deepening, even if the direct protocol bridge isn't there yet. The trajectory is clear, the connections are building, the architecture is assembling, and the gap between where we are and where we need to be for fully seamless SWIFT XRP integration is closing with every new development. Now let me talk about the Noom partnership, because this is where the theoretical connections become real transaction volume. Noom positions itself as global infrastructure for real-time cross-border payments, moving money to accounts, cards, and wallets in 190 countries across 100 real-time markets. They process $60 billion in payments annually, serve 1,000 customers across banking, fintech, payroll, markets, and travel, support 100 currencies, and can connect via API, portal, or SWIFT. Any bank plugged into Noom can directly route Ripple-enabled corridors where it makes the most sense. Noom doesn't just use Ripple's network, it uses it as a core growth engine. Ripple payments help Noom enter new markets, scale faster, and deliver real-time cross-border transfers to banks. Through Ripple, Noom became the first in their region to offer corridors from North and South America to multiple Southeast Asian destinations. And here's the testimonial that shows what this looks like in practice. If a parent's child calls from Singapore at midnight needing money immediately, the old way required physically going to a cash location, giving cash, calling with a number. The new way, 3 clicks on a mobile app, and the money is in the bank account within minutes. That's the service banks offer when connected to Ripple's network. And that's why banks want the connection. It helps them acquire customers. Recent data shows XRP payment volume across the network reached about $617 billion in 2025, up 138% from 2024. And that's before the $13 trillion Ripple Treasury pipeline and the Ripple Prime brokerage volume get added. When you combine all of Ripple's acquisition channels, G-Treasury at $13 trillion, Ripple Prime adding trillions more, Noom at $60 billion, plus the existing Ripple payments corridors, the total payment volume accessible through Ripple's ecosystem is approaching $16 trillion plus. Subscribe right now, hit the bell, drop a in the comments, because as more partners like Noom come online and scale, the real transaction volume flowing through XRP and RLUSD grows, and we track every one of these developments as they happen. Now let me address the price picture honestly, because XRP holders deserve the full context. XRP has posted its longest monthly losing streak since 2014, 6 consecutive months of decline since October 2025, down over 55% over that period, losing an average of 10% per month. The last time XRP saw a slide this prolonged was a 7-month skid from December 2013 to June 2014. The macro headwinds are real. The Iran war escalation, oil above $110, Trump's 48-hour ultimatum, all of it creating the kind of fear environment where risk assets get sold, regardless of fundamentals. But here's the cycle perspective that matters. A widely followed Bitcoin cycle chart is signaling that we are currently sitting at the mid-cycle bottom, the phase that has historically kicked off the final parabolic run. Based on previous cycles, the model projects Q3 and Q4 2026 tops around $180,000 to $220,000 for Bitcoin, with upside extensions even higher. XRP typically moves with Bitcoin in the early cycle, then outperforms significantly once Bitcoin dominance drops and alt season hits. Based on XRP Bitcoin ratio projections, analysts are modeling anywhere from $5 to $12 for XRP, depending on how high Bitcoin goes. The $5 to $8 range for late 2026 is the number that keeps appearing across multiple credible models. Not a moonshot prediction, a cycle-based projection grounded in how XRP has historically performed relative to Bitcoin in the terminal phase of bull markets. And the catalyst timeline supports it. Clarity Act targeting April passage, SWIFT framework going live mid-year, NASDAQ tokenized stocks Q3, institutional flows arriving 6 to 12 weeks after regulatory clarity, Bitcoin cycle projecting its peak in Q3 or Q4, alt season historically following Bitcoin dominance decline. Everything converges in the back half of 2026. Let me leave you with this. The XRP Ledger's decentralized exchange is processing real transaction volume right now. RLUSD and the Brazilian real flowing in massive quantities. Multiple currencies and tokens being natively routed with instant settlement. The infrastructure isn't theoretical, it's live. Ripple Treasury is SWIFT certified with $13 trillion in annual payment volume and native digital asset capabilities. The distinction between what that means precisely and what people claim it means matters. We covered it honestly. The trajectory is clear even if the final protocol bridge isn't there yet. Noom is scaling real corridors, processing $60 billion annually through Ripple's network. XRP payment volume hit $617 billion in 2025, up 138%. The partnership ecosystem is growing, not shrinking, and the Bitcoin cycle model projects the back half of 2026 as the parabolic phase. The same window where the Clarity Act, SWIFT framework, NASDAQ tokenization, and institutional flows all converge. 6 consecutive months of red candles, the longest losing streak in a decade, and every single piece of infrastructure underneath the price is stronger than it was when the streak began. The frustration is real. The infrastructure is also real. One of these is temporary, the other is permanent. And the people who understand the difference are the ones positioned for what comes after the frustration passes. Price is a distraction. Value is the reality. Structure is what matters. And the structure being built, live on-chain DEX flows, SWIFT-certified treasury platform, scaling partner corridors, cycle-aligned timing, is the most complete infrastructure setup in XRP's 14-year history. In a market fueled by emotion and noise, we thrive on data and composure. Remember, haste leads to loss, while calm analysis leads to victory. Comment "calm analyst" below. Let me see who stayed for the complete picture, both the exciting parts and the honest nuances. And share this with someone who needs to see what's actually flowing through the XRP ledger right now. The 100,000 block visualization tells the story better than any price chart ever could. Like, subscribe, notifications on. I'll see you in the next one. Stay patient, stay rational, and as we always do, we don't wait for the future, we plan for it. Peace.